Welcome to the deep dive. If you're involved in the investment space, well, the Indian discount broking scene is less a market, more like a digital arms race,
Yeah,
really.
it's incredibly competitive.
Exactly. And today, we're strapping in for a very specific look at 5paisa Capital Ltd. We're digging into their Q2 FY26 performance. That's the quarter that ended September 30, 2025.
Right.
Our mission really is to figure out their strategic playbook. How did they survive? In a market where key industry volumes were actually shrinking, how did 5paisa manage to, well, not just survive, but pull off this big pivot towards getting higher quality customers?
And invest heavily in tech at the same time.
Yes. Investing aggressively in a next-gen tech platform seemingly built to challenge the giants like Zeroda and Grow. We want to go beyond just the P&L and uncover the strategic trade-offs they were making.
Okay, and to really grasp what 5paisa achieved, you first have to understand the backdrop. The sources we looked at paint this picture of intense market volatility. Yeah, mostly fueled by rising geopolitical tensions and, importantly, persistent selling from foreign institutional investors, the FIIs.
Okay.
And this FII selling, it really put downward pressure on overall market participation, on sentiment generally.
Right.
However, and this is, crucial context, that volatility was massively counterbalanced by domestic institutional investors. DII inflows were huge.
Okay.
So you had this kind of dual market fear from outside players, but massive confidence, it seems, from local funds.
Okay, let's unpack that volatility thing with some numbers. The data we reviewed shows FI outflows actually went over $10 billion in that quarter.
A huge number.
It is.
Yeah.
But like you said, the DII stepped up massively, pouring in over $20 billion. It's at this domestic safety net, right?
Yeah.
Acting as a stabilizer against the external fear.
Precisely, a significant counterweight.
But even that couldn't totally save industry trading volumes, could it? We saw industry-level drops across the board. Cash market, average daily turnover, ADTO. That measure of trading activity, it fell 16.7% compared to the prior quarter. And futures and options ADTO fell 13.6% in the same period. So it tells us that, yeah, traders were pulling back overall.
And, that leads to this surprising fact that was sort of buried in the sources, despite that big pullback in general trading. The industry's margin trading facility book, the MTF book, it actually went past 1 lakh crore.
Whoa, hang on. Let's just pause on that for the listener. MTF, that's basically investor leverage, right? Borrowing from the broker to make bigger trades.
Exactly, amplifying trade size.
So why does hitting that 1 lakh crore mark matter so much?
Well, it matters because that figure signals that even though overall participation dropped, the appetite for risk, for leverage among the really committed investors stayed strong, robust even.
Okay.
It highlights that let's call them power users, the ones using sophisticated tools, they were still very active. And that resilient leverage appetite, that's really key to understanding 5paisa's specific financial performance in the quarter.
Stability seems like the right word, because if we look at their consolidated results, given that huge industry volume drop we just talked about, their total income staying pretty steady at 77.3 crores. That's just a marginal 1% dip from Q1.
Yeah.
That's actually quite remarkable, isn't it?
It really is. How did they pull that off when others were shrinking?
Yeah.
Well, that's where the revenue mix comes into play. It strongly suggests that even if their overall trading volumes maybe dipped a bit, they successfully shifted revenue towards higher margin stuff, especially that MTF business we just mentioned.
Makes sense.
But as we hinted before, this stability, it didn't come free. Net profit after tax, the PAT, that decreased 18% quarter on quarter, came in at 9.5 crores.
Okay.
The key insight here isn't just that profit dropped, it's why it dropped. It looks like a deliberate strategic trade-off. They basically chose to pay more now through higher marketing spend and finance costs tied to MTF growth to lock in a much higher quality customer base for the future.
And grow those profitable leveraged products.
Exactly. Investing for the longer term.
Okay, now we get to the real heart of their strategy, I think. It's one thing to accept a profit dip, but you need results for that extra spending, right?
Absolutely. You need to show it's working.
And 5paisa did. They crossed a huge psychological barrier. Total customer base is now over 5 million. 50.1 lakhs, to be precise.
That's a big number in the space.
It really is. And what's truly fascinating, I thought, was that new customer acquisition grew 20% compared to the prior quarter. They added over 95,000 customers.
Yeah.
How do you accelerate user growth by 20% when a market's hostile and volumes are dropping?
Yeah, that's the million-dollar question, isn't it? The answer seems to lie entirely in efficiency and laser focus. They weren't just grabbing any user off the street.
Right.
They were acquiring the right users. They managed to cut their customer acquisition cost TAC by an impressive 15%.
Okay, wow.
And at the same time, the first-year revenue FYR from those new customers improved by 25%. So they basically optimized their marketing spend to target more seasoned traders, not just first-time signups.
That focus on quality sounds great, but let's maybe push back on the numbers a little. Management is claiming their ideal payback period. The time it takes for a client to generate enough revenue to cover that acquisition cost is down to 6 to 7 months. They're calling that best in class. Is that really verifiable? Or
Yeah.
just management spin?
Look, that claim is definitely aggressive, no doubt. But the metrics we just discussed, cutting SAC while boosting FYR, that provides pretty strong internal evidence supporting it.
Okay.
They are spending less to find a customer who then spends more, faster. It's the difference between just growing your user count and growing your active trading population. Big difference.
And that strategic choice, it seems to be reflected very strongly in the trading data itself. While the overall industry volume was shrinking, 5paisa's average daily turnover ADTO, measured by notional value, it actually rose 18% compared to Q1.
Yeah, rose. Against the trend.
Hit 2.68 trillion. I mean, that seems like the smoking gun, doesn't it? It confirms they are winning over those seasoned high-volume power users.
Exactly. And when you look at their estimated average revenue per user ARPU management, puts it quite high, somewhere in the 8,000 to 9,000 per year range.
Wow.
That confirms they're effectively monetizing these active traders. And this focus on the high-value trader, it's essential when you look at the sheer scale of the Indian market.
How so?
Well, we now have over 207 million DMAT accounts in India. It's enormous. But management pointed out something critical. Only about 46.2 million of those clients are actually active.
Only 46 million out of 207 million.
Yeah, that's roughly 25%. Just a quarter of all accounts actually trade regularly. So when 5paisa focuses on efficiency and quality, they're consciously targeting that crucial 25%. They seem to understand that user retention and revenue generation decays really fast among the rest.
And this intense focus on power users, it translated directly into a major upgrade cycle during the quarter, didn't it? This is where 5paisa seems to be trying to move beyond just being a discount broker towards building this next-generation trading ecosystem.
That's the phrase they use, yeah. It's about the platform itself.
Right. So for the really speed-obsessed traders, the scalpers you might call them, they launched this web-based scalper platform. Unified interface, 3-in-1 charting, promise of ultra-fast execution.
You need that kind of feature parity, absolutely. If you want to pull active users away from the big established players, you have to compete on tools. And critically, they made their really high-yield product, that MTF business, even more attractive, more accessible. MTF income grew 22% quarter over quarter. That's significant growth.
22% growth there. How did they manage that specifically?
Well, they basically made the terms irresistible. They lowered interest rates, some as low as 0.026% per day, apparently. They expanded the list of eligible securities you could use for margin from about 700 to over 1,200.
Okay, much wider.
Much wider. And they introduced this flexible pay later option with an unlimited holding period. They essentially made the borrowing tap cheaper and opened it wider.
Got it. And beyond just the hardcore trading tools, they also seem focused on reducing friction, smoothing out the user experience. I thought the upgrades there were interesting.
Like what?
Well, moving to real-time bank verification, PI-less DigiLocker KYC for onboarding. Just making it almost effortless to sign up.
Reducing barriers to entry.
Yeah. And they launched a dedicated in-app ETF dashboard, catering to passive investors too. Plus, implementing those SEBI-standardized validated UPI handles for payments. Faster, compliant transactions.
Right. It all points towards building a complete product suite. They seem to acknowledge that pricing is kind of standardized now. Everyone can claim to be a zero broker.
True.
So the real differentiator has to be the product experience, the tech. And to secure that edge, they made a really big directional move by bringing in some highly specialized talent.
Okay, let's talk about that talent.
Yeah.
The appointment of Mr. Zor Gorlov as an additional independent non-executive director. That feels like a major signal to the market. Who is this guy, and why is it such a big deal?
Gorlov is he's a genuine AI veteran. He co-founded and was the CEO of Casisto.
Casisto.
Yeah.
They do AI for banks, right?
Yeah.
Digital assistants.
Exactly. A leader in applying AI within financial services. So his appointment, it isn't just shuffling board seats. It looks like an explicit mandate to drive AI-led transformation within 5paisa.
So think of it like that digital arms race we mentioned. Zero, then grow. They have the sheer scale advantage, right?
Yeah.
Millions of users.
Huge scale.
But 5paisa just brought in this specialized weapon, essentially, on Gorloff. They seem to be betting that if they can integrate superior AI, maybe for predictive analytics, risk management, personalized user journeys, that kind of thing, they might be able to leapfrog the current leaders. It feels like a calculated gamble, using product intelligence to try and beat scale.
Now, to fund this kind of aggressive expansion targeting quality users, investing in sophisticated tech. Your balance sheet needs to be, well, rock solid.
Yeah, you need the cash.
And the sources confirm that. The company's net worth stood strong at 626 crores at the end of September 2025. They also raised funds from commercial paper, specifically to support the continued growth of that high-yield MTF book.
So they have the capital back in the strategy.
It appears so. They have the financial muscle for this aggressive push.
Okay. Now, in the spirit of, full disclosure and due diligence, we do need to impartially report on some ongoing regulatory challenges that were mentioned in the sources. Listeners need to be aware of these.
That's right. There were two key notices either during or just after the quarter ended. First, they got a show cause notice from SEBI, the regulator, on September 10th, 2025.
Okay, what about?
It was regarding the expiration of their research analyst license, which apparently lapsed way back in April 2022. They've submitted a response to SEBI, but the potential financial or operational impact of this still undetermined at this point.
Okay, one notice. What was the second?
Second, this followed an income tax search operation that happened back in January 2025. They received a notice on October 6th, 2025 to file a revised tax return.
Okay.
Again, the specific financial implications of this compliance issue, they remain undetermined right now, but they are definitely factors to keep an eye on, important to monitor.
Absolutely.
Yeah.
Those regulatory things add a layer of uncertainty. But shifting back to the competitive landscape for a moment, management seems to be anticipating a pretty fundamental shift in how the whole industry makes money. What's their take on the future of pricing?
Yeah, they express a very clear view on this. They believe the current model of cross-subsidization, offering things like free equity delivery to attract users for other paid services is probably unsustainable.
Interesting.
They think it's likely to end industry-wide. They actually noted that 5paisa already charges €20 for equity delivery.
Right.
So they see themselves as potentially benefiting if their competitors, especially the big zero brokers, are eventually forced to start charging for services that are currently free. They're anticipating, maybe even hoping for, a correction in industry pricing models.
Yeah.
#tag outro.
So what does this all mean for you, the listener? Let's try and summarize the key strategic takeaway here. 5paisa successfully navigated a really tough market by making a clear choice, didn't they? They prioritized strategic investment over, perhaps, maximizing short-term profit.
That seems to be the story.
They drove high-quality customer acquisition, and we have proof in those great efficiency metrics, the lower C, the higher FYR.
Right.
They substantially grew their highest yield business line that leveraged MTF trading book, even while the overall industry was declining.
Quite a feat.
And, crucially, they're investing heavily in product differentiation. We saw that with the advanced scalper platform, and especially with bringing in top-tier AI talent like Mr. Gorloff. It's all about securing their competitive footing for the future.
It really is the ultimate pivot story, playing out in a hyper-competitive sector. And given management's conviction that, retention and high ARPU depend more on product superiority now, not just low prices, it raises a really important final question for you to think about.
Okay, what's that?
Well, the large incumbents, they have these massive customer bases, right? Scale is on their side. But 5paisa is building this customized AI-driven digital weapon. So the question is, how quickly can those scale leaders actually match these sophisticated AI integrations?
Good question.
And maybe even more provocatively, will new independent AI or algorithmic trading platforms eventually become the real differentiator, making the underlying broker almost secondary? The battleground in broking seems to have officially shifted from just low cost to high intelligence, and that evolution, that's something worth watching very closely over the next couple of years.
Fantastic analysis. Really puts it into perspective. Thank you for joining us for this deep dive.